What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today we're going to be discussing Bitcoin, what happened last week, and what we could potentially be looking at to happen this week coming. So make sure you stick around until the end. Right off the bat, we'll go ahead and get started with the yearly open. That is my target, has been my target since this consolidation zone was put in. When we got up here, I was expecting it to get hit and it did not. It just rolled over. So what this does when price puts in a high like this, but then you see a sell-off, right? So what this does is it creates liquidity, and the liquidity is sell side stop losses. So people that are taking shorts up here, putting their stops above any wick highs. You can see that price did come back up and again and did the same exact thing. So what you in a sense have here is what retail likes to call a double top. So typically they will be looking to sell anytime price comes up into these regions because, well, let's face it, it failed the last two times it was up there. So I'm going to put on our moving averages here. Let me just bear with me 1 second and let me get the ones that we want to look at and get rid of the ones we don't. So basically, the way that I approach markets, especially in a range-bound condition, is I look where the 21 exponential moving average is, which is this yellow line here, on the daily time frame. Because if you are trading above the 21 exponential moving average, then that typically means you will be trading above your 50 on the RSI. Now, it's not exact or 100% because you can see here, you're trading under your 21 exponential moving average, and down here on the RSI, you are also trading under the 50. This white midpoint line is your 50, and you can see you touched it here, and then again here you just rolled over, and then finally this is your breakout, which means you're taking out daily resistance as well as closing strong on the day above your 21 exponential moving average. Now you can see this take place on the RSI as well. This is your breakout right here, got above the 50. So this is typically what we're going to wait on now. What we wait on is for price to create a support zone, and we take those support zones off of the bearish close candles because the close is where your support is. Now the open is where you would be looking for demand, and we were looking for demand, but demand did not hold. Support did. When price traded right back down into this region of demand, it did hold on the first pass. Then you had the second day, which had a much deeper correction, a penetration down all the way down to the 21 exponential moving average, and then closing above support but not demand. So we were going into this day, or these 2 days here, we were looking at this and we were saying that yes, we closed above support, but we did close below demand. So what we will do is we will watch the support zone, and you can see the very next day on the open you had a push lower into support, and then you got your expansion range. So $40,950 is my entry. Now that we are pretty far away from the 21 and coming into the 200 exponential moving average, also you have daily resistance. Yesterday price closed back below it and below your 200 exponential moving average. If you are looking for bullish entries from now into next week, today is Saturday, then you will want to see another support zone formed before taking any entries. All right, so what we are looking for is potentially another support zone to be formed, but not up here around the 200 exponential moving average. We want the support to be formed a little bit lower, get those bears thinking that they have won the day again. Then we can look for new bullish entries targeting the breakout because you have a ton, and I do mean a ton, above those swing highs. So that would propel price up into that yearly open. So basically, people are wondering, what are we going to do now? What are we going to do if price gets up in there? What are you going to do if you did not take this bullish entry? As the people who did take this entry with me are now setting pretty for any bullish expansions that take place for the next several weeks. If we do get the breakout of this range and then the yearly opening access support, then you can get another push higher. What I want to see for me to continue to be bullish is price to close above this and show me bullish price action. I do not want to see price get above the yearly open and then 2 weeks or 3 weeks later drop back down below it, as that to me could be a sign of bearishness. Obviously, I won't take the first time we drop back down into the range as a bearish entry, but I will be looking for any steps higher to potentially be resistance. But as long as we're showing the ability to control the yearly opening range, meaning we are able to close above and trade above it and make a range or something that shows that there is accumulation happening above the yearly opening, then we can look for continuation to the upside. Price is starting to move higher, and the put to call ratio, may eventually start to go up now that we are moving into those regions where people might want to look for short entries. The next thing I want to pull up here is a metric that shows accumulation. It's called the accumulation trend score. Now, I only have the same amount of time pulled up. This is a couple months price action. When the numbers or the little dots, the little circles start to get closer to the whiter, brighter colors, that shows accumulation. The darker colors show no accumulation. But the reason I'm bringing this up is simply because over the past several days, we have started to see those numbers of accumulation tick up. So here, Friday, March the 18th, you get a lighter number or a lighter area than you had there, which indicates that you are seeing a little bit of accumulation going on. And then all week long, March 22nd, March 23rd, March 24th, all these are getting lighter and lighter and lighter, which indicates that we are seeing more and more people start to buy back into this market, looking for the breakout. Over here, I'm going to pull over this metric. This is a tier 3. I don't have access to it, so I had to take a picture of it. This is the number of accumulation addresses. So any wallet that has a certain amount of Bitcoin for a certain amount of time on it, this is when people are buying and adding, adding. So if they're buying more Bitcoin and adding to their portfolio or their wallet address, and if you take a glance over here where this is the consolidation range, and boom, this is going higher. So this is another metric that just shows that, people are buying more Bitcoins and adding to their existing portfolios. And then this next one here is the inflation rate, and this shows accumulation as well. Even though price is moving lower and chopping sideways, this metric is showing that people are indeed buying and accumulating Bitcoin. Even though we have a terrible macro backdrop for a bull market rally, we do have some metrics that show even with the uncertainty that we have, we are seeing a fairly high amount of accumulation. Here is the weekly. On the weekly, today is Saturday, so we will have a close tomorrow. We are trading above weekly resistance, and it's a very important weekly resistance level because since 2021 started, Bitcoin has not been able to close a weekly candle above this range. That does not mean if we do close this week's candle above that I'm going to be uber bullish looking for new all-time highs, because traps exist. We could get this breakout, and then the very next week we could test that yearly opening range and fall like a brick. If that were to occur, we would potentially be looking for near-term shorts. We would be looking for price to drop back down below this week's range, come back up in for a test of resistance, and then we could maybe start looking for short side entries. So yeah, this is still going to take some time in my opinion. I don't think that you're just going to see one massive bullish candle reaching for the moon. You could, but I just don't expect it, as there is a lot of trading that's going on in this asset. Over here is your 2-week time frame. So the 2-week resistance level that needs to hold is all the way back down to 42K. It's not that far away, and this candle closes tomorrow. So this is a very good indication that we will potentially see a resistance test or your last support zone on the 2-week time frame, which is setting directly above the yearly opening range, and that would be right here at $46,687. So the takeaway is I still have a target of that yearly opening range. Let's go back over here to the daily time frame. All right, so in summary, basically, I am looking for the yearly opening range to be tested, as that would liquidate this swing high and this swing high. What that means is that would bring in, just by price moving up there and liquidating all those shorts, that would by default bring in a whole lot of demand, because to exit a short position, you must buy back into the market. Does the demand that will be triggered once price gets above this liquidation point and this liquidation point, will that demand demand force price higher with more demand coming into the market? Or will the market sell into that demand? If the market sells into that demand and the amount of selling that comes in once that demand is triggered, if that selling exceeds the demand, then you will have a rejection and price will fall right back down into the range. So yes, trading above the yearly opening range, holding that level and showing signs of bullishness for multiple weeks would absolutely be good, and we would be looking for higher regions of price to target. If you fail or you get above that liquidation range or the yearly open and you reject, we will probably be looking for shorts. But you will know what I'm doing. Just follow me on Twitter. Also, I put out a video every Saturday. If you don't see a live stream next week, it's because I was either unsuccessful at finding a better internet source. And if that occurs, then basically I will just upload a couple videos throughout the week so that way you know what I am thinking. So thank you guys so much for being here. If you learned anything today, make sure you smash the like button, hit the subscribe button, because we do this all the time, constantly killing the market. It's fantastic. If you want to learn how to kill the market too, where the higher probable entries are, then make sure you hit that subscribe button. You guys have a fantastic week. Make sure you trade safe, trade smart, and as always, happy trading, everybody.